Okay, good morning, students. First year accountancy 1.4 basic accounting terms. Generally, in accounting, we use the following basic terminology to express our idea. The first one is account. Account is a formal record of a particular type of transaction expressed in money. That means account means it is an economic affair. In terms of money, we express the transaction of a record as a formal way. So, a formal record of a particular type of transaction expressed in money is known as account. In other words, a summary of relevant business transactions at a place. That means in Mantralaya, it is a summary of business transaction of a person XYZ. It is known as the account. It is also known as a brief history of financial transactions of a person, both debit and credit. So, a form of account expressed by the debit and credit. The both transactions are known as the account. So, account means the digits of a particular person. So, account, we have to clear your account, or we have to see your account. These are all the formal words which we learn and listen from others in any organization or company. So, account means a business transaction which is recorded, a summary of relevant business transactions at a particular place. A brief history of financial transactions of a person, both debit and credit. So, the second one is known as the accounting entry. An entry which is related to your account is known as the accounting entry. So, in simple form, a record of economic transaction in the account book is known as accounting entry. So, in general words, an entry which is related to your account is known as accounting entry. It was recorded in account book. For example, journal, cash book, etc. are the example for accounting entry. Transactions, a business activities, transfer of money or goods between two accounts is known as the transaction, or a performance of business is known as transactions. Example, purchase of goods. So, if you purchase goods from others, it is a transaction. Bank borrowings. If you borrow the amount from the bank, it is a transaction. It is the relation between borrower and the borrowing. So, it is a transaction. It comes under the transaction. The example is bank borrowings. Salary payment. The owner will pay the salary to the employee. So, salary payments is also a transaction. Money lending. If you lend money to others, it is known as money lending. So, it is also an example for transaction. Rent payment. Receiving consignment. Dividend received. Dividend means profit. If you purchase shares in a company, the profit will be divided and it is called as the dividend. Cash and credit transactions. The transactions are two types. If you transact for cash, it is called as the cash transaction. If it is for credit basis, it is also comes under the transaction, but it is titled as the credit transaction. Accounting period. So each and every organization or company will put a period for maintaining the account. It may be 1 month or 6 months or 1 year. So that period is known, that period of time for operating statement is prepared is known as the accounting period. Generally, 1 year is the accounting period. It may be the calendar year or the financial year, most probably. Calendar year and the financial year comes under the opinion of the organization or a company. So, for a particular period of time which accounting is made is known as accounting period. Proprietor. Proprietor is nothing but the owner. Owner of a business is known as the proprietor. A person who invests capital intention of getting profit is known as the proprietor. Capital amount invested in the business is known as the capital. The capital increases with profits. It will be decreased with losses and drawings. So the capital may be increased or drawn for the due to losses or withdrawals. The capital may be in less form, and if you get more profits, the capital should be increased. Assets. Properties of business are known as the assets. For example, cash in hand. If you are having 10 lakhs in the hand, it is known as cash in hand. Plant. A business plant worth 1 crore or 50 lakhs is known as the asset of that particular company. Machinery, furniture, fittings, bank balance. A balance which is in the bank is known as the bank balance. Debtors, bills receivable, stock of goods. So if there are a stock in form of goods, it is known as the asset, and it may be expressed in stock of goods value. Investments, investment in other companies or other assets are known as the investments. Goodwill, etc. Goodwill is the great asset for everybody which is not seen, of course. So assets are nothing but something valuable. So assets are divided into two types. The first one is known as tangible asset. An asset which we physically touch or seen is known as tangible asset. So physical existence is compulsory for tangible assets. You can see or touch, for example, plant and machinery, cash, etc. We can touch and put in our hands, and there is a physical appearance that is known as tangible asset. Intangible asset, so it is quite opposite to the tangible. It has no physical existence. For example, the best example for the intangible asset is goodwill. It is the worth of a particular place. It will not seen, it will not touch, and we can't see and touch the value of goodwill. Patent rights, trademarks, etc. are the intangible assets that which we should not see and touch. Liabilities. Financial obligations are known as liabilities. Example, loans to other persons, or loan from banks, or creditors for goods supplied, and bills payable